Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine December inflation comes in at 1.8%. That is higher than our Business World median forecast of 1.4%, but still within the Bangko Central's estimate of between 1.2 and 2%. This is the 10th straight month that inflation undershot the central bank's 2 to 4% target. The Philippine government trims its economic growth targets until 2027. And budget watchdog Social Watch Philippines slams President Marcos's decision to retain what it calls questionable program funds in the 2026 national budget. We speak with Alce Kitalik, Senior Budget Specialist at Social Watch Philippines. The Philippine Statistics Authority announces December headline inflation accelerating to 1.8%. For a closer look at what drove prices and what this means moving forward, we go live to mobile journalist Amy Atienza. Amy, what are the key drivers behind the latest inflation print?
Yes, that's right, Cathy. The Philippine Statistics Authority actually announced that there is a 1.8% inflation rate for December 2025. This is slightly higher than the 1.5% that we have recorded in November 2025. But there are also key factors that we have to consider. One of which is the occurrence of typhoons here in the country, which affected vegetable farms. Hence, food prices also reached higher prices. And here is one of the statements made by PSA Undersecretary Denise Mapa regarding that.
Dahilan ng mas mataas na antas ng inflation itong Disyembre 2025 kumpara noong Nobyembre ay ang mas mabilis na pagtaas ng presyo ng food and non-alcoholic beverages na may 1.4% inflation rate. Ito ay may 97.5% share sa pagtaas ng pangkalatang inflation sa bansa.
Yes, to continue, this means, Cathy, that there is a 1.7% average inflation rate for the country in 2025. And even though we are still looking forward to what's going to happen in 2026, of course, PSA Undersecretary Mapa said that there may be higher risks also into increasing inflation rate for 2026, given the corruption probes and issues that we are facing right now in the country. But also regarding that, of course, we are also hoping that the food prices and also other prices and the basic necessities of the Filipinos would be much lower, given that they would also help in implementing the cut rates for the Bangko Sentral ng Pilipinas will also help in implementing the cut rates so that businesses could also do their part for the inflation and the prices of the needs here in the country. That's all for now, Cathy.
Yes, and this is certainly going to be a key metric for the Bangko Central to decide on when it meets next month. Thank you so much, Amy Atienza, reporting live for us from the PSA headquarters. Now, the government has lowered its economic growth targets for this year and next as the impact of the corruption scandal is expected to linger into the first half. The Development Budget Coordination Committee cut its growth target of 5 to 6% for 2026 and 5.5 to 6.5% for 2027. This is below the previous 6 to 7% goal set for 2026 through 2028. The target, however, was retained for 2028. Growth slowed to an over 4-year low of 4% in the third quarter, dragged by weaker government spending and dented confidence following the flood control scandal. Economy Secretary Arsenio Balisacan said economic momentum may remain soft in the first half of 2026, but is expected to pick up later as governance reforms take hold. The downgraded outlook also reflects global and domestic risks in line with recent downward revisions by the International Monetary Fund, World Bank, and Asian Development Bank. Meanwhile, Palisacan said growth for 2025 could land around 5%, still putting the Philippines among the fastest-growing economies in Asia. However, if realized, this would fall short of the 2024 growth rate of 5.7% and would mark a fourth straight year of missing the government's target. The official full-year GDP growth figures for 2025 will be released on January 29th. President Marcos has signed the 6.793 trillion peso budget for 2026, putting an end to a reenacted budget that lasted 5 days. He vetoed 7 of 10 items lodged under the unprogrammed appropriations. The president has vetoed a total of 92.5 billion pesos worth of items under the unprogrammed funds, which include payment of personnel services requirements, government counterpart for certain foreign-assisted projects, and budgetary support for government-owned and controlled corporations. In the end, Mr. Marcos has left 150.9 billion pesos in this category, retaining support for foreign-assisted projects, funding for the revised Armed Forces Modernization Program, and the Program on Risk Management. Unprogrammed funds in the 2026 budget are the lowest since the pre-pandemic GAAs, according to the DBM. But Mr. Marcos's first enacted budget in 2023 contained unprogrammed appropriations worth 807 billion. Budget watchdogs claim these items are shadow pork funds, which the Supreme Court already declared as unconstitutional. Mr. Marcos says these funds are not blank checks. He also alleviates concerns the 2026 budget may also be riddled with irregularities as last year.
Sa ating mga kababayan, dama po namin ang inyong agam-agam at pangamba sa nakaraang budget. Kaisa ninyo ako sa pagnanais na masiguro ang bawat pisong buwis ay mapupunta sa tamang proyekto at sa tunay na pangangailangan ng ating taong bayan.
Still, the outlay does not contain prohibitions on political endorsements or guarantee letters for accessing aid programs. But DBM Acting Secretary Rolando Toledo told Storycon yesterday the GAA contains a provision preventing political involvement in such initiatives.
It was a general provision of the GAA, Section 19 to be exact, nakalagay doon prohibition on political involvement in the distribution of cash and other forms of financial assistance. Nakalagay dito, no public officials holding elected positions shall influence, be present in, participate in, or take part in the actual distribution of any cash assistance and other forms of financial aid. No political signage, branding, paraphernalia, or activity shall be displayed or conducted within the distribution area.
Our first guest says the 2026 budget is still, quote, captive to abuse, despite Marcos's 92.5 billion peso veto. With us now for more is budget watchdog Social Watch Philippines Senior Budget Specialist Alce Hitalig. So good to see you, Alce. Welcome to the program.
Thank you. Good morning, and thank you for having us.
So it took at least 8 hours for Social Watch to come out with its official statement from the time of Marcos's signing. So what makes the signed 2026 budget captive to abuse? And what does that mean in practical terms for ordinary taxpayers?
Yeah, because the 2026 budget now is signed, so what we said that it's now captive to abuse, you know. And for those that which were we requested or we asked for veto, the president did not acted on it, no, and the decrease, no, or the vetoed items, the 92 billion vetoed items are from the unprogrammed appropriations. What we asked for is the vetoing of items under programmed appropriations. And yeah.
Let's just take a look at the numbers here and show you and show everybody exactly what you're referring to. Social Watch should ask the president to veto at least 319 billion pesos. So he vetoed 92.5 billion. So that's nearly 30% of that. What have you found is the single biggest red flag in the unvetoed portion of that 319 billion?
That 319 billion contains the increase in the budget of the Convergence Special Support Program under DPWH. That's 82 billion, which comprises of the Basic Infrastructure Program and the Strengthening Infrastructure Projects Alleviating Gaps, or CPAG projects under the DPWH. Even though the government or the bicameral conference committee has decreased the budgets of the regular DPWH programs, such as the bridge program, network development program, and asset preservation program, this convergence special support program increased massively, to the tune of 82 billion, which was we said, to be vetoed. And then we also have financial assistance to local government units, which increased threefold. And you have a growth equity fund, which increased to tenfold. So these are red flags that we included in our request for veto, but the president did not act on it.
So these
basically,
increases you're saying are insertions happening?
Yes, these are.
Oh, okay. So how did the last-minute insertions happen when the BICAM proceedings were live streamed for public scrutiny?
Yes. These were some of the insertions were inserted by the House, by the Senate, during their own versions of the General Appropriations Bill. But there are others which, for example, the farm-to-market roads, the 8.9 billion pesos. Last-minute request for swapping. These are very late in the game, basically, during the bicameral conference committee, which the public has very less opportunity to scrutinize.
So when Social Watch Philippines did discover those side meetings happening outside the formal live stream sessions, what did you do?
Yeah, this is really our problem. These side huddles, these executive sessions and caucuses were really a problem during the during the so-called open bicameral conference committee. We see it as insincere. Of course, what we did there is we monitored all the sessions of the bicameral conference committee, and we took note of this opaque and untransparent episodes, so to speak, during the bicameral conference committee meetings, which I think should be improved on moving forward and should not happen. These executive sessions and the side huddles.
Let's talk about the ayuda funds, because Congress in the National Expenditure Program bumped that up to 138 billion pesos. Can you confirm if these funds have been retained in the signed budget?
We still have to receive or to receive the uploaded copy of the General Appropriations Act, which they at this time they haven't posted yet. But if the ratified version of the General Appropriations Act is passed, that will be retained, the 138 billion that we cited in our statement. And these ayuda funds, namely the medical assistance to indigent patients, the tulong pangkabuhayan for disadvantaged workers, and the AICs, the assistance to individuals in crisis situations. So we flag this. What we were asking then is for the president to veto these items and implement or pass a supplemental budget to revert the items, these items to their NEP, so National Expenditure Program levels, because the bicameral conference committee increased these budgets. There have been insertions, which actually is bigger than the House versions or the Senate versions.
Now let's talk about the vetoed 92.5 billion, because Social Watch cited some initiatives that the group thought were worth supporting but were stricken out. What are some of these?
Yes. We have a more nuanced assessment of the program appropriations. The constitutionality is a separate issue, but the current iteration of the program appropriations already removed the questionable strengthening assistance to government infrastructure and social programs social programs or SAGIP. No, so what we lamented, no, in our in the vetoed items are clear items which have clear purposes. So, for example, the items under DTI, you know, the automotive industry competitiveness programs that were included in the ratified version of the General Appropriations Bill. These are vetoed, which is important because it promotes industrial policy, you know. So that's our assessment of the program appropriations, that this is basically a mixed bag of valid and questionable items, no. But the biggest item, which is the SAGIP project, no, has been removed, no, from the early iterations of the General Appropriations Bill.
All right, so many more questions than answers. Also, we have about a minute. What is the fix now for what's already been signed? Is it all too late? What is Social Watch's next course of action?
Yeah. By the way, what you have posted earlier is also our critique, because the 50 billion, no, of the revised AFP modernization program, there's already a 40 billion allocated in the program appropriations. Now we will wait for the posting of the budget of the GAA, including the veto message. It's important to see the veto message, the fine print, no, of the General Appropriations Act, including the veto message of the President. So we will know what is the rationale for the vetoes of the announced items, no, and maybe there are other items, no, that were vetoed, no, so, or for conditional implementation, no. So we have to look into that, and of course, moving forward, we have to strengthen this participatory budgeting, citizens' participation in the budget process, public education on the budget process and entry points for participation. And of course, now that the budget call has been issued, we will engage now the 2027 national budget. No, for as to the our next steps for the 2026 budget, I think it will stay at the meantime for monitoring of the 2026 budget when they post that when the DBM post is the GAA, in their website.
Okay.
And we will explore other options moving forward.
All right, well, keep us up to speed on what you found out next. Thank you so much for the assessment. Alce Kitalig of Social Watch Philippines.
Thank you.
And you're watching Money Talks. Coming up in our People, Profit, Planet segment, homegrown green logistics startup Mover is eyeing and becoming Southeast Asia's leading green logistics provider. We speak with its CEO and founder, Dennis Nang. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. markets were in the green in the aftermath of Venezuelan President Nicolas Maduro's capture. The Dow rose to a new high, gaining 595 points or 1.2%. Both the S&P 500 and the Nasdaq climbed by 0.6%. Maduro's ouster and President Trump's pledge to revive Venezuela's crude production fueled surges in growth stocks such as Tesla, Amazon, and Palantir. Benchmark 10-year Treasury yields ticked down to 4.164%. Gold prices jumped 2% to $4,436 per ounce. U.S. futures are trading near flat line with the Dow, the S&P, and the Nasdaq all down by less than 0.1% each. As for Asian markets, they're a mixed bag this Tuesday. Investors assessing the tensions between the U.S. and Venezuela over Maduro's ouster. Japan's Nikkei 225 rises by 0.5%, South Korea's Kospi tumbles 1%, and Australia's ASX 200 slides by 0.5%. Let's take a look at our own markets following the Philippine inflation rate coming in at 1.8% in December. PSEI higher at 6,190, 0.4% higher. In fact, at the open, the stock market kicked off the first full trading week of 2026 on a strong note, rising by nearly 0.5%. As local share prices rise and investors anticipate a lower inflation print. The broader all-shares index jumped 1%, with local counters mostly in the green. As for the Philippine peso, it opens a tad stronger, 59.07 to the dollar. The peso sank back yesterday to 59 pesos as players flocked to safer assets following America's attack on Venezuela, expected to influence the global oil market. 10-year government bond yields ticked down to 6.058%. He is the founder and CEO of Mober, a homegrown green logistics startup electrifying middle and last mile deliveries in the Philippines for over 10 years. Under his leadership, Mober supports major brands cut costs and carbon emissions as they move goods from warehouse to doorstep. Well, with us now for more is Mober founder and CEO Dennis Nang. Very happy New Year, Dennis. Welcome to the program.
Yeah, thank you for having me, Cathy.
All right, so how did Mober close out 2025? I understand that a lot of your clients are in the consumer industry. Yeah. You've got SM Appliance, you've got Starbucks, Nespresso, Monde Nissin.
Yeah, we also have IKEA. So in the logistic industry, right, I mean, we call this OND, the October, November, December. This is the busiest season in our field. We're still catching up. I mean, the overflow of the delivery is still catching up this January. Yeah, we're still very, very busy.
That's interesting. There's an overflow of deliveries despite the fact that retail sales didn't really pan out as good. I mean, I had Roberto Claudio of the Philippine retailers on this very same seat tell me that sales plummeted by 10%.
So probably in our industry, I mean, we deliver B2B for the FMCG. These are all projected already by 2025. So what I'm saying, the overflow of the delivery are these are the appliances and furnitures. They shop December and they're overflowing the delivery, so we're still doing the delivery.
Right. So you've crossed several milestones in 2025. There's the expansion in Thailand, and there's also the setting up of the biggest commercial EV charging hub here in the Philippines, and also introducing the country's first 100% electric tractor head that allows for huge deliveries. How is this all now fitting into your strategic vision for 2026, noting that you've already crossed your 10th year in 2025?
Yeah, it is a very challenging 2025. We really grew so fast.
That's a problem? Growing so fast?
Well, as a founder, sometimes it's scary, right? I mean, growing is good, but growing so fast is quite scary. So, meaning as a startup, I have to make sure that funding are coming, right? When you grow, we need funding support, right?
Right, but what are the drivers of growing so fast, given that you look at the economic data, growth is slowing. So presumably, logistics would go along at being a barometer of the economy.
Okay, so because we are in the space of, we call ourselves a trucking company, right? So we are in space of very new technology, transitioning from ICE, the internal combustion engine, the diesel one, to EV, right? So for us, this is very fast because a lot of European company that they have this net zero target. So they need to make sure that by 2030, 2040, that the carbon should be net zero, right? So the transition, because there's no other player doing the EV, so for us, we find it very fast because they transition from ICE to EV. So this is a new segment for them and a new
What are
segment for us.
yeah, the conversations right now in corporate boardrooms, I mean, is it much less difficult to convince the CEO or CFO of what you're doing, considering that you can find real-time CO2 reduction data tracking, which is really important in putting in a metric for the cost savings that come along with using EV vehicles over ICEs?
Okay. The current status now is like they don't ask for the cost saving first. They ask first what are the reduction in the carbon. So we talk a lot to their procurement and at the same time to their ESG department. So on the cost side, what we do is we never add premium to our fee because we're doing EV. So we just do a 1:1. If they're paying this much for their current rate for the diesel, we charge them the same. So there's no transition, there's no premium by doing a green delivery.
But how quickly can profits be had once EV is used within the ecosystem of a company? And how can you convince the CFO that this is not going to be an EV asset add-on to the balance sheet, being net zero logistics and zero capex?
So going back to our client, because this is not in their balance sheet, they outsource their delivery to us. So even EV or ICE, it's not in their balance sheet. So as far as CFO is concerned, I think transitioning to EV or partnering with Mober won't be their concern. There's no impact as far as they are concerned. So on our side, on Mober's side, our profitability, well, again, the biggest challenge for us is we don't have infrastructure here for the charging station. That's the reason why we built our own. Operating EV is quite cheap, meaning we're lower probably around by 50%. But buying EV is more expensive than buying an ICE. One thing that we are enjoying is the support from the government that using EV, we are exempted from the color coding. So one day extra revenue is something that we really wanted. And we're hoping that the government will, looking forward that they will extend the deadline. I mean, they said until 2028, hoping that they still extend it as a benefit to us.
Yeah, these benefits really matter if you look at the mom and pop logistics operators, because you have a heart for supporting these mom and pop logistics operators. What are you now doing to just focus on them in this next maybe 10 years? Because you focus on the big companies, that this isn't just a sustainability story, but something of a livelihood and upskilling story for the local operators and the drivers.
So we don't compete, we collaborate, right? We have a client like Kuninagal, we have a client like Maersk, right? This is a big giant in the logistic industry. They outsource their delivery to somebody like us or to some mom and pops, right? So for EV, they come to us. So as a founder, I've seen this vision that our industry is very fragmented. You cannot see 50 companies owning 100 fleet. Mostly these are the mom and pops, owning 5 and 10, right, units. Because EV is very new in the Philippines, banks are afraid to finance, especially on the commercial EV. They don't know the resale value, the residual value also, right? So financing an EV from a mom and pop point of view is really very hard. So what we do in Mober is like, we build our own infrastructure. We have investors, we have capitals. So what we do is we will help the small trucking company to transition to EV by renting the EV from us, using our infrastructure. And at the same time, we can partner with them if we need more provider, then they can just partner with.
A lot more work for you then, for the small mom and pop operators.
Yeah.
Congratulations and good luck for 2026. Thank you so much. Dennis Nang of Mober. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.